We just have to think for ourselves. It's very important to think different or just think at all and just question things. So we have inflation. We know inflation is a monetary phenomenon. They increase their money supply significantly. Hence, we have inflation. We can read up about that from Milton Friedman. He's great, monetarist, and talks about helicopter money. We aren't really getting richer. We're just getting more diluted, and our currency is losing value. US dollar is still king, in my opinion, because there's no real contender. We don't have another contender that can compare with the US dollar. It's not that the US dollar is so strong. It's that there's really no comparison. There's nothing as stable or liquid as the US dollar. So in my opinion, it's still supreme. Inflation is very important. We talk about the compounding of inflation. There's a great site called Trueflation. It talks about inflation since 2020 is actually about 23%. That's pretty scary, right? Well, we know that prices are elevated significantly. Now, prices are not inflation and vice versa. Inflation is a measure of the price index of all relative goods. So it's a basket of goods. So it's a great discussion that I had with Dr. Safadina Moose as well as Michael Saylor. And they talk about inflation in the US being about 7%. That's a great podcast for you to watch as well. Very enlightening. We talk about Austrian economics, which is awesome. Great field of economics for free markets and less government regulation and for freedom. And so they make a point, Michael Saylor especially says how we need to have exponential growth. We need to have this significant 10% plus a year to really be growing our money. This is constant quest for growth. So I want to talk about yields, rising long-term yields. Another thing that's important. I had a great discussion with Peter Bookvar, and he says that he thinks that Japan, which is the largest foreign holder of U.S. debt, selling our treasuries could be contributing to that long-term yield, the bear steepening of the yield curve, and that long-term yield rising. That's really great thinking there. We don't know the exact cause, but it is concerning. We know the banking crisis is a symptom of the zero interest rate policy and easy money. Really having rates that low for too long. The Fed basically gave us a whiplash, just like Dr. Steve Hanke talks about. Great, amazing economist. He was an advisor to Ronald Reagan. He's an excellent economist, and we had him on the show as well. So he talks about how the Fed is leading us into a severe recession at this point because they've over tightened and they're not paying attention to the money supply. So his argument is that the money supply is shrinking at the fastest rate since the 1930s. So we are headed to a baked-in recession in 2024. Can never disagree with Dr. Steve Hanke. Great words from him. He makes a great load of sense. One of my top economists that I like to follow. So we have long-term yields affects the housing market, the sovereign debt that's maturing in 2024, 2025. Sovereign debt's another one to watch over there. Very concerning. It could be a sovereign debt major crisis. That could be the one that triggers everything. And that's what Dr. Peter St. Onge had mentioned as well. There's so many potential things to watch. Then we know that governments around the world are selling U.S. treasuries as well as Japan, like I mentioned. So, and the U.S. is also offloading its balance sheet as well. So as rates work through the system, it's going to get tighter. It will take time. Commercial real estate's refinancing now. We know that. And we have cap rates that are lower than the risk-free rate. That's very concerning, as well as debt yields. So there's a lot of issues that they're concentrated at the regional banks. So those are other things to watch over there. Potential policy mistakes by the Fed. Now, my opinion is they shouldn't have gone so low for so long. The fact that they waited to raise rates after the tapering of their asset purchases back, and I think it was in December of 21, I think they waited too long. If they had started raising rates sooner rather than waiting, it would have been more gradual. Maybe they wouldn't need to have risen as high. The Fed's dual mandate of maximum employment and their inflation bias, along with these policymakers thinking that 2008 rate increases were a mistake, I think led to this potential policy mistake. The Fed would not raise rates until threshold was met, and they put no ceiling on how inflation would go before raising rates. So that's part of this inflation bias. They've had, there was no inflation. I mean, the first 2 decades of the 2000s, we didn't have any concern of inflation. So lot of potential policy mistakes there. And it's just something to learn from for the future. And there was a great article on Hutchins about that. It was an economic paper that discussed that as well in further detail. So I found that very enlightening. So liquidity and money supply. Like I discussed before, inflation is a monetary phenomenon. Money supply is shrinking at a really fast rate. However, there's still liquidity in the system. We see that with the markets running as they are. The fundamentals, in my opinion, look very challenged. And the equity risk premium is very narrow. That's the spread between the riskier assets and the risk-free rate. We have the yields are very low compared to risk-free rates. You have T-bills in the mid-5s, short-term T-bills, of course, 3 months or less. You could do 4-week T-bills and mid-5s. That's not so bad. Highest they've been in quite some time, over 15 years. So looking at markets, commodities, real assets, of course, technology, cloud, AI is looking strong right now. I don't know how long it will last. Maybe they're expecting a rate cut. Sound money is important. Bitcoin, in my opinion, is the hardest money ever created, and sound money. And gold, very bullish on these monetary debasement insurance. Remaining liquid is key. So in an environment of higher cost of money, it's always prudent to remain liquid. So just always be positive about the future. We will get through this. We've gone through very difficult times in the past, and I do believe in humanity. But it's important, and I'll finish up on this note, that we are fully aware of what's going on. And we may not know everything, but at least question and think different. And awareness is key. Awareness of yourself and awareness of your environment. And at the same time, have some key steps on how to prepare and be ready for potential situations that are upcoming in this environment that we're in. Stanley Druckenmiller specifically stated how we're in a lost decade. And if, no one knows the future, I think he's a fantastic money manager and brilliant mind in finance. So I would heed warning with that statement, and I would be very cautious. And with this decade, and there's definitely going to be opportunities, and we're going to stay abreast of that. However, overall, it will be a challenging time. So stay positive, remain liquid, and subscribe to the channel to stay ahead of all the latest. Thanks.